Boy oh boy, retail investors are getting screwed by the CCIV Lucid Motor merger news. We now find out the true valuation of merger deal is now valued at $24 billion instead of what Bloomberg initially reported it as a $15 billion spec when it initially released its article on January 11, 2021. Guys, this changes everything. In this video, I will explain to you what we learned from the merger deal, why CCIV Stock Tanked, provide you the good news, the bad news, and what I did today. I will also briefly talk about the overall market condition. The question is, should you be worried? Also, be sure to watch all the way to the end where Lucid CEO Peter Rawlinson had an interview on CNBC discussing the SPAC merger deal in details. So stick around. Sawasdee Krap, that's hello in Thai, and welcome to Quantum Finance. My name is Anthony, and I'm a former engineer and data analytics turned entrepreneur and investor. My prior career, I was very successful in creating predictive models for Fortune 500 companies in Silicon Valley using historical data to predict future outcomes. I applied my knowledge to my own portfolio, and in the past 12 months, grew it more than 550%. In this channel, I focus on high growth and disruptive technology stocks for short-term momentum trades and long-term investments. If you're new, welcome. And if you're returning, welcome back and thank you for your support. Please help us grow this channel by hitting the sub button below. Make sure to hit the notification button so you get my latest video update. While you're at it, do hit and like and share the video. I will see you down there. Please note that this video is for entertainment purpose only. I'm not licensed. However, that does not mean that I won't present you with facts and trading ideas that will supercharge up your portfolio. No BS and straight to the point. So let's get right into it. Man, CCIV is the most hyped and most anticipated SPAC of all SPACs. It is also the largest in terms of dollar amount raised. So needless to say, Lucid Motor took advantage of the merger deal with CCIV as it much needed additional cash infusion to stay afloat and to grow as it prepared to release its first EV to its customer this spring. Can't blame CCIV and Lucid to do what it is right for their investors, their employees, and their overall business. However, this is where the retail investors get screwed. With regard to Bloomberg's reporting, the initial valuation was $15 billion. This is probably correct when the news initially broke. I think what really happened is that CCIV and Lucid realized how much more money they could raise with their SPAC. And instead of $15 billion, they pushed for a $24 billion valuation. All the while, everyone thinks it's a $15 billion valuation. Okay, the good news is the merger is officially confirmed on Tuesday as anticipated. The transaction will give Lucid $4.4 billion of net cash, including some $2.1 billion from CCIV net any redemption, and another $2.5 billion from fully committed private investment on public equity or PIPE. CCIV and Lucid said the PIPE is priced at $15 per share, which is a 50% premium on CCIV's net asset value. This would give the company a $24 billion implied pro forma equity value. The two companies said the PIPE's funding comes from Saudi Arabia Public Investment Fund or PIF, as well as from funds and accounts managed by BlackRock, Fidelity Management and Research, Franklin Templeton, Neuberger Berman, Wellington Management, and Winslow Capital Management. CCIV and Lucid added that the PIPE's term include an investor lockup provision that binds holder well beyond closing. Lucid CEO and Chief Technology Officer Peter Rawlinson said his company, quote, is going to public to accelerate into the next phase of our growth as we work toward the launch of our new pure electric luxury sedan, Lucid Air, in 2021, followed by our Gravity Performance luxury SUV in 2023, unquote. He said cash from the SPAC merger will help expand Lucid's Arizona manufacturing facility, which is currently creating pre-production builds for the Lucid Air. Now the bad news. I'm not hating CCIV and Lucid Motors at all. I like the company and think it has an enormous potential. I just think that the misguided valuation by the media that had me wrong. Because of the valuation at $15 billion, I project that CCIV would hit $65 to $85 range, while we now find the valuations at $24 billion, which is the opposite, and therefore CCIV stock is really worth between $30 to $35 per share. I did clearly state this on the YouTube Quantum Finance community posting explained to our Quants member yesterday. Basically, CCIV shares dropped due to the $24 billion valuation. I have to add that there was a lot of manipulation by the media and big institution working hands in hands. By the way, this is nothing new. This is anticipated. They have been doing this type of manipulation since the creation of stock market. It's a little guy like us, retail investors, that get screwed all the time. The second reason is that there are 1.6 billion shares outstanding once the merger is complete. The third is that at $57 closing price, the current market valuation for the combined company is at $91 billion for a company that has yet to deliver its first EVs. And lastly, this is where retail investors really get screwed. PIPE investors are able to invest at $15 per share when the current stock price is at $57 at yesterday's closing. And of course, profit profit taking. Do the math, guys. Pure manipulation at the sacrifice of the retail investors. Needless to say, the stock tanked in after hours yesterday, and today as low as $30 during the trading session. I have stated that CCIV is overvalued, which everyone knew going in. I just didn't realize how much overvalued it is with the most recent news detailing the CCIV and Lucid merger. So at this point, basic math, valuation, and fundamentals really matters. If you have sold at the peak when it was at $55 to $65 range, congrats. There's nothing wrong in buying low and selling high. If you're long, stay calm. There's nothing to worry about. CCIV will be the next Tesla. It will create more millionaires in the years to come. But you have to have a strong belief in the company and have the conviction to hold during the bumping roller coaster ride. Let's look at the chart. Looking at the 1-minute day chart, CCIV opened at a very bearish downtrend. It bounced off the $30 support level and got as high as $43.94 before retracing back to the mid-30s. It formed a pennant triangle and went south from there. The good news is that the volume was very light during the midday, but it did pick up again toward the end of the day. It is under a lot of selling pressure. It closed at $35.21, down $22.16. This is a whopping 38.63% drop. It is trading at a volume surge of 294% of normal trading volume. Its MACD is waning. It did form a doji candlestick on a downward trend. Usually when I see this is a high likelihood that the stock will rebound the following day. We will need a confirmation tomorrow. It did run the numbers and came up with two possible scenarios. The first one is that CCIV will rebound tomorrow, trade sideways, and slowly crawl back up. However, looking at the broader market, we are in the midst of a market correction, and therefore anticipate CCIV could continue to dip tomorrow. Not as big as a drop like today, since CCIV is within the target valuation of $30 to $35 as per my calculation. It will continue to trade sideways and then slowly climb back up. Because of this, I did purchase about 134 CCIV shares today. Not a lot, but slowly cost averaging up. Now, as you all know by now, seeing that everything is in the red for the past few days, we are in the midst of a market correction. However, I do not think it is a crash, though it feels like one when your portfolio drops so much in a relatively short time. I do think the sell-off will eventually stop. The market is anticipating another stimulus package from President Biden this March. This is a much-needed catalyst that will stimulate the economy. For the most part, I'm holding on to my positions. I did trim a little here and there to minimize my risk exposure like SOS and to lock in my profits where it made sense. I would not be in a buying spree yet, as I am not sure if the market has bottomed out, though I did purchase some CCIV shares today. I have experienced market correction many times in my trading and investing careers. The best way is to stay calm and stay collected. Don't take any actions based on emotions, but base it on facts and data. You will minimize errors that way because it will cost you a lot of money if you didn't. This is why I strongly encourage everyone to do their own homework or due diligence on the stock that you plan to buy, sell, or hold. Believe 50% of what you hear and another 50% of what you see. In the end, it's the 80-20 Pareto rule, meaning that only 20% of what you hear and see are facts that will affect the 80% of the outcome. Also, remember that you are responsible for your own decisions and action. Treat trading and investing like a business. You're in charge of your own profit and loss. Most importantly, stay calm. Best of luck to everyone. Let's chime into what Peter Rawlinson has to say during the interview on CNBC.
Peter, one of the things I think our viewers, they're so excited. They wanted a piece. They bought Churchill. When you try to figure out a price, did you say, listen, you know what, we're every bit as good as Tesla, if not better, but we're priced underneath Tesla. So therefore, anyone who thinks that this is overpriced as a stock is missing the big point, which is we have more technology, we have faster charging, we got a better car, and we're cheaper than the stock of Tesla.
Well, I think there's a gross misunderstanding on the market, actually, Jim, because actually the price, the acquisition price of Lucid from Churchill was $11.75 billion. That was a snip. It was a great deal for Churchill, but there was a quid pro quo. Churchill brought this incredible array of the bluest of blue chip companies to invest in us with long-term commitment, with a lockup and a commitment. And those companies provided we were oversubscribed for the PIPE. So we actually expanded the PIPE, and the PIPE sold at $15, and this is unprecedented in the history of SPACs. So this is why I'm so buoyed that so many of these savvy investors, blue chip companies, could see the long-term value potential, and that lies in Lucid's technology.
Yeah, and Peter, I mean, to that point, you did sell 16% of the company to CCIV shareholders. And to your point, the PIPE holders will own about 10% at 15, which is 50% more than those who invested originally in the SPAC at 10 have paid. But that said, you still sold 26% of the company at a discounted value. When I say that, I mention it because you might have just gone public the traditional way. There seemed to be great enthusiasm for your stock and your product. Why did you still choose to go this way?
I think that this has enabled us to secure our future. We've raised over $4.5 billion. This means that we can accelerate our business model and in a secure manner. And this is really important because the whole world needs to move to sustainable mobility with technology. And this means that Lucid can be at the forefront of this new movement. The world cannot wait. This has given us security, commitment from long-term investors, and we've been augmented as a company by the illustrious roster of luminaries that Churchill Capital has assembled, which provides a whole new dynamic and dimension as we grow the business going forward.
So there you have it. If you find the content of value, please leave a comment below. Do share, like, and subscribe if you have not already done so. Also hit the notification bell for my next video. Now let's go make some moolahs.